The session where we are going to discuss some more questions, and whatever the questions we include in this series of the session, that all are based on the previous and memory based question. So before exam, just revise all the questions and just learn all the concept whatever I explained in my lectures. Okay, so let's start the session. Before to start, one update from our side, that is currently two batches that is purely based on your upcoming examination, and you can enroll in the revision batch, and as well as you can just enroll in the MCQs batch, where you will get 3000 possible questions that may come in the examination, where I am your AP faculty and I will explain you 1000 possible questions of the accounting, and that all very important for exam point of view. And you can enroll by applying the code, that is Y422. With this code you will get the maximum discount. So if you have to just enroll that, just apply the code, that is Y422, and you will get the maximum discount on the product. Okay, so let's now start the session. First question, that is from the chapter of the depreciation, and depreciation chapter from the exam point of view is very important. Like, you will definitely get 5 to 10 marks questions in the exam. So just understand how we solve these kind of the questions in the exam when you get the written down value method, and this is a very important method in terms of the examination. Okay, so you only have to understand what the concept behind and how we just solve these kind of the questions. So like a machine which is purchased for the 4 lakh rupees. So how we solve these kind of the questions. Like, we always have to include a total cost of the machine. Okay. So like here, no any other cost given. The total cost of the machine which is given here, that is 4 lakh rupees. So just write here 4 lakh rupees, and its rate of annual depreciation which is given 20%. Okay. So whenever you have just know that is annual rate of depreciation which is given to you, that is 20%, and this annual rate of depreciation is actually the constant rate of the depreciation which just apply on all the useful years of the machine. Okay, so like whenever you have to just find out the value with the written down value method, and we know that in the written down value method we use depreciation with the previous year end value. That means we use the previous year's end value for calculating the depreciation. Okay, understand this? Okay, so now when you have to just find out the depreciated value at the end of the second year, so you actually have to just find out what will be the value of the machine at the end of the second year. So whenever in the exam you have to just find out what will be the depreciated value at the end of the second year of the machine. So how you can just calculate this? The value of the machine which is given of 4 lakh rupees, and we know that it is depreciated 20%. That means now your value of now the machine value, that 20% reduced for the first year. That means now the 4 lakh value that would be just 80% of the for the first year. That means now your machine value, that would be 3,20,000 rupees, isn't it? Okay, so in the written down value method, we use the previous year end value for calculating the depreciation. So now we just write here 3,20,000 rupees again, and now it is again 20% depreciated. Okay, so if we just calculate the value of what will be depreciated, that will be your something 64,000 rupees. Okay, and if we have to calculate the value that at end of the second year, so how we can just calculate this? Just subtract 64,000 rupees in the 3,20,000 rupees, and you will get the answer 2,56,000 rupees. So this is how we just solve these kind of the questions in the exam. Okay, so one more type we also can solve these kind of the question whenever you have to solve for the value of the machines. Okay, so whenever you have to solve for the value of the machine, and whatever the method it is given, suppose that it is written down value method it is given, so we have to calculate the value of the machine at the end of the second year, right? At the end of the second year. That means if our machine value, that is 4 lakh, that means for the first year it would be depreciated with the 20%. That means now the value of the machine will be 80%, and again it is again 20% depreciated of this value. That means again it is 80% depreciated. So we have to only solve this calculation, and we will get the value of the machine, that will be 2 lakh 56,000 rupees, and that will be your answer. So this is a very short way to solve these kind of the questions. Okay, so I hope it is now clear for everyone. So whenever you will get these kind of the questions, you would not have to just complicated this. You only have to solve by this way, that is 21st for the first year it is 20% reduced. That means now the value of the machine would be 80% of its current price, and for the second year it is again 80% remain the value of the machine. So that will be your answer. I hope it is now clear for everyone. Okay, now understand another question. Another question that is related to your accounting cycle of the business transactions. Okay, so these are the phases are given actually. Okay, so we know that that is the first phase of your business transaction, that is started with the recording. Okay, this is very obvious to understand, that is recording. What we understand by the recording? Recording is the, recording is the basic phase of your business transaction. It is a basic phase of your business transactions, or say accounting, and that is also understand as the bookkeeping. Okay, so in the recording we actually just use the bookkeeping method, and under this process all the important transactions that pertains to business entity are recorded. Okay, so in this phase, whenever we are just talking about the recording phase, in this phase all the financial transactions are recorded in the systematically as well as in the chronological order in bookkeeping, and it includes the assets, liabilities, ledgers, journals, etc. So that is the your basic phase of the business transaction, or say accounting cycle of the business cycles, business transaction, that is recording, classifying, summarizing, as well as interpreting, right? So what we understand by the recording phase, that is basically based on the bookkeeping, and all the important transactions that pertains to business entity are recorded in this phase. Okay, after that the another phase, if we talk about, that is classifying phase. So that is classifying phase, like the classifying phase of the accounting, that is involves the sorting and grouping similar items. Similar items means, what we understand by the similar items, suppose that some transactions that would be of the debit side, some transactions that would be of the credit side, like we just sorting and grouping similar items under the designated name, category, as well as the account, right? So in the classifying phase we just use the sorting and the grouping similar items, like we use the current asset in the one term, we use the current liabilities in the one term. Okay, and assets and liabilities whatever we have. Okay, so we just use these terms in the classifying phase. So classifying phase is basically you're just sorting and just putting the similar items under the one head. So this phase use systematically just analysis, or say recorded data, in which all transactions are grouped in the one place, right? So that is the part of your classifying stage. After that another stage, that is known as your summarizing stage. And what we understand by the summarizing stage, just understand this. This is actually known as the phases, and summarizing phase, like the summarizing phase of the accounting, that involves summarizing the data, after each accounting period. Like it may be your monthly, it may be your quarterly, it may be for the yearly. Okay, so the summarizing phase of the accounting, if we are saying, if we are talking about the summarizing phase of the accounting, that means the summarizing phase of the accounting that involves summarizing the data, like after each accounting period, like such that may be your monthly, quarterly, yearly, and the data must be presented in a manner which is easy to understand. Okay, and used by the just external and internal users of the accounting statement. So that is the phase of your summarizing, where we just this is a basically phase for your just summarizing the datas. Okay, after that each accounting period. After that another just another phase, if we are talking about, that related to your interpreting phase. Okay, so what we understand by the this phase, that is interpreting phase, like it is concerned with analyzing financial data, and it is critical tool for decision making. So interpreting phase, like it is a critical tool for the decision making, and this is called the decision making phase. Okay, so this is interpreting phase. So this is a basic accounting cycle of the business transaction, and you should just know about just why we record, why we classify, and summarizing, and all whatever the name itself is just representing its nature. Okay, so whenever we're talking about the recording, that means record the financial transaction, classifying like all the datas just put we just put under the systematically head, and summarizing like summarizing the datas. Okay, so after that, interpreting is also one of the phase of the accounting cycle of the business transactions. Okay, so your answer that will be the first: recording, classifying, and summarizing. The next question that is related to your Mr. A's father that wishes to have 75,000 rupees in a bank account when his first college expenses begin. So what is the present value of that amount which is deposit now at 6.5% compounded annually if A is to start college in 8 years hence from the now? This is a very important question if in terms of the examination. So like this is a very important question in the exam point of view, because in this question you have to just find out the relationship between the future value and the present value. Like I always explain that what is the relationship between the future value and the present value. We know that that is future value that is equal to your present value, and it is multiplied by the 1 plus rate of interest, and it is to the power of the n denotes the number of the years, right? Okay. So now, if we are talking about like A's father just wants 75,000 rupees in his bank, okay, and this 75,000 rupees just this 75,000 rupees just will become in the 8 years. So what amount that should deposit currently, that with the interest rate of the 6.5% in 8 years, this amount will become this amount. Okay, so we use the formula that is future value that is equal to present value, and it is multiplied by the 1 plus r to the power n. And we know that what we want, that we want 75,000 rupees in bank account of the A. Okay, and what should be the currently deposit now, that is that we have to calculate the present value here, and rate of interest which is 6.5% given. Okay, so how we can write the 6.5% if we are talking about, that is 6.5%, which is 6.5 divided by 100, and it will be 0.065. Okay, so just write here 1 plus 0.065, and it is to the power of 8 years. Okay, so now in the exam, like it is the sometimes the value is already given in the examination, so you only have to put the value like 75,000, and it is divided by the 1.065 to the power 8, and it would be your present value. So now the present value that would be your 75,000, and it is divided by the 1.065 to the power 8, which is given the value 1.6555. Okay, so when you just solve and you will get the answer, just tell me what will be the answer. So your answer that would be 45,317 rupees. Okay, so that would be your answer. So your answer that would be the first option. I hope it is now clear for everyone. So you only have to understand one more thing I would like to include here, that is you always get a question related to future value and the present value in the exam. So this is a very important thing to understand. Like you always have to understand what is the relationship between the future value and the present value. Okay, and one more way you can just memorize this, like future value that obviously that obviously would be greater than the present value. So this is future value and this is the present value, just multiplied by the 1 plus r to the power n, and this now this value would be greater than the present value. Okay, so this is how you can just memorize this. I hope it is now clear for everyone. Okay, so your answer that will be 45,317 rupees. Next question, that is which of the following liabilities are not related to operating cycles? Okay. So the one word that is very important to understand what we understand by the operating cycles. Operating cycle is also just known as the cash cycle of the company. That is very important to understand. Operating cycle is also understand as the cash cycle of the company, and it is just a time that is required for a company's cash to be put into its operations. It is the time, it is a time that required for company's cash, like whatever the cash company is having. So company's cash just to be put into its operations and then return to the company's cash account. Okay, like it is a cycle, like company's cash, just understand this. It is a time that required for company's cash to be put into its operations and then return to its company's cash account. Okay, so that is just known as your operating cycle. And if I say what are the examples of the operating cycle, so I will say that is like if the company is paying for the raw materials. Okay, so that is very important thing to understand. What we understand by the operating cycle, it is basically a cash cycle of the company. Like one time you just infuse your cash into your operations, whatever the if we are talking about for the factory, so whatever the manufacturing, whatever the everything is happening in your factory, so whatever the on what product you are actually working, so whatever the cash include on that product, after that, or say after the sale of that product, whatever the cash is returned to your company's cash account, that is known as your cash cycle of the company. Okay, so if we are talking about the examples of the operating cycle, so pay for the raw materials just needed in the products. So if we are talking about like pay for the raw materials needed in the products, that is a very important example to understand. Another example, like you are just paying for the labor charges, that is also just include in your just operating cycle. And another, that is you just hold the finished product in your inventory. So you just holding the finished products in your inventory, wait for the customer's cash payment to be collected. Suppose that the debtors you are having, and you also have to just wait for the customer cash payment you have to just collect. So that also just comes under the operating cycles, right? So in this question, like the multiple options are given, and the right answer, that will be your bonds payable are not related to your operating cycle. Because if you're talking about utilities payable, utilities like electricity, waters, whatever the expenses that are necessary for your just company, or say for your just factory, so that comes under the utilities payable. And that is waste payable. Wages, we generally talking about, if we are talking about the wages, that relates to your labor charges. Okay, so whatever the charges we just provide the laborers to manufacturing, or say to for production of our product, so that related to your wages charges. Okay, so that all related to your operating cycle of your businesses. Okay, so like utilities payable, base payable, that all related to your operating cycles, but bonds payable is not related to your operating cycle. That's why the answer of this question, that would be the one. Okay, I hope it is now clear for everyone. Another question that is related to your, while outsourcing activities, bank has to taking care of losing control. So this risk of outsourcing is known as. Okay, so first we have to understand what is the meaning of the outsourcing, right? So in context of the banking, if I say, suppose that this is a bank, and this is a particular bank which is hiring another company, like say another company A, for its goods, or say for its some functions. Okay, in context of the bank, generally banks outsource the non-core services. Okay, that is related to non-core services, not the core services, only non-core services, right? So bank outsource another company, or say bank just hire another company for its some functioning, like for its some non-core services. Okay, so that is known as the outsourcing. So in this practice, it is just a practice of hiring a party outside the bank to its services or create goods, and it usually undertaken by the company as a cost cutting measures. Okay, so this is also very important to understand. That is uh, usually just bank use this model for the cost cutting measures. Okay, like now just understand what are the different examples of the outsourcing of the banking activities. So like if I say that is data centers, a bank just hires data centers bank just hires another company for its functioning, like data center, management of the data centers, supporting software application. Okay, so this is another case of your outsourcing activities of the bank, like ATM networks, okay, and call centers. So that are the some areas where actually bank hired another company to do its functioning. So that is known as the outsourcing of the bank, right? Now we have to understand some risk actually associated with this outsourcing activities of the banking, and one of them is a strategic risk. Okay, so the answer of this question, that is strategic risk. While outsourcing activities, bank has to taking care of losing control. So this risk of outsourcing is known as a strategic risk. Okay, I hope it is now clear for everyone. So that's all for this session. I hope this lecture is useful for you, and if you are liking our effort, please do not forget to hit the like button on this video. And if you are not downloaded the Adda 247 application, just download this and subscribe the Officers Adda 247 YouTube channel, so that you can get notifications of the live sessions as well as the notifications of the important news that is related to your examination. Okay, so best wishes for your preparation. Thanks for watching me here, thanks for joining me here, and like this video if you are liking our effort and content, and share this video to your friends so that maximum number of our colleagues can join with us. Okay.